All right, so are you ready to get into some AI-driven trading today?
Always ready for a deep dive into the world of trading tech.
Well, this one you sent over is pretty interesting.
Which one are we talking about again?
CoreX G, ring a bell.
Oh, yeah. Yeah, that's right. The one with all the wild claims.
Yeah, exactly. The marketing materials make it sound like it's going to make us all millionaires overnight.
We'll see about that, won't we?
That's what we're here to find out, right?
Absolutely. Got to separate the hype from reality.
Exactly. And, we've got quite a bit of info to dig through on this one.
Let's see. We've got the marketing stuff, of course, a bunch of user reviews.
Even a blog post from the developer himself.
Oh, wow. So he's really putting himself out there, huh?
Seems like it, so he better be able to back up those claims.
Well, let's dive in and see what we can find, shall we?
Sounds good to me.
Yeah.
So first things first, what exactly IS this CoreXG thing supposed to be?
Okay, so basically it's an expert advisor, or EA for short.
Which is just a fancy way of saying a trading robot, right?
It's exactly.
It's designed to automate trades in the Forex market.
And this one specifically targets the gold US dollar pair, right?
That's right, XAUUSD, if you're into the trading lingo.
And it operates on the 1 hour time frame, so it's not like a scalper bot or anything.
Nope, it's looking for longer-term swings in the market.
Interesting. And how does it supposedly do all this?
Well, according to the developer, it's all about cutting-edge technology.
Like what specifically?
They're talking neural networks, machine learning, the whole shebang.
And of course, they throw around the term big data like it's going out of style.
Oh, yeah. Gotta have that big data strategy, right?
So what does that actually mean in this context?
Well, from what I gathered, they're saying CoreXG analyzes tons of market data.
Like what kind of data?
The usual stuff, price trends, trading volumes, but it goes deeper than that.
Oh, really?
Yeah, they claim it looks at news events, economic indicators.
Even tries to figure out market sentiment from what people are saying online.
Exactly.
Hmm.
The idea is to use all this data to find good trading opportunities and to react quickly to changes in the market before they even happen.
That's the goal anyway. But of course, whether it actually works is another story.
Right, it sounds impressive, but we've heard this song and dance before, haven't we?
Many times, unfortunately. But
Yeah.
hey, maybe this one's different.
Maybe so, but we're not taking anything at face value, are we?
Absolutely not. We got to dig deeper and see what's really going on under the hood.
All right, then let's talk about the neural networks because that's where things get really interesting.
Yeah, the developer's blog post goes into some detail about that.
So break it down for us. What are these neural networks and what are they actually doing?
Okay, so basically they're using 4 different types.
4 different types. Wow, that's a lot to unpack.
It is, but we'll try to keep it simple.
Okay, hit me with it.
So first up, we've got convolutional neural networks, or CNNs for short.
CNNs, those are usually used for image recognition, right?
Exactly. But here they're being used to analyze price charts.
So they're teaching a computer to see patterns and trends that humans might miss.
Precisely. It's like giving the robot a trader's eye for the charts.
That's pretty cool, actually. So what's next?
Then we have recurrent neural networks, or RNNs, with something called LSTM.
LSTM, what's that stand for?
Long short-term memory. Basically, it means this type of network can remember past information.
So it's like it's learning from history to try and predict what the market might do next.
Exactly. It's using past data to make more informed predictions about the future.
Fascinating. Okay, what about the other 2 types?
Right, so the third type is called autoencoders.
Autoencoders, what do those do?
Think of them as data simplifiers. They take all that complex market data and boil it down to its essential features.
So they're helping the EA to focus on the strongest signals and ignore the noise.
Exactly. They're like a filter that separates the wheat from the chaff.
Okay, that makes sense. What about the last one?
This one is particularly interesting. It's called reinforcement learning.
Reinforcement learning, that sounds like something out of a sci-fi movie.
It kind of is,
Yeah.
but it's real, and it's being used in trading.
So how does it work?
Basically, it means the EA learns from its own trading activities.
So it's constantly adapting and optimizing its strategies based on what works and what doesn't in the market.
Exactly. It's like the EA is constantly learning and refining its approach with every trade it makes.
Wow, that's pretty wild. So are we looking at a guaranteed money-making machine here?
Now, hold on a second. Just because it uses fancy AI doesn't mean it's a guaranteed win.
Right, so not magic.
Exactly. These technologies are impressive, but their effectiveness in trading depends on how well they're implemented and trained.
So just because an EA uses neural networks doesn't mean it's going to be profitable.
Exactly. There are a lot of other factors at play.
So how do we know if this CoreXG thing actually translates into actual profits?
Well, that's where things get a bit trickier, and that's where we'll need to dig into user feedback, which, as you know, is a mixed bag.
Right, we've got some users singing its praises, but others are raising some serious red flags.
So we've got some detective work to do.
Exactly. We need to separate the signal from the noise and see what's really going on.
And that's exactly what we'll do when we come back after the break. So we've talked about all this fancy technology, but at the end of the day,
Yeah, it all comes down to one thing, right?
does it actually work?
Does it make money? And just as importantly,
How does it handle risk?
that's a crucial point, right?
Because absolutely no trading system is perfect.
then there's always the potential for loss.
Exactly. You can't eliminate risk entirely.
So how does this CoreX G thing approach risk management?
Well, the developer claims it prioritizes security and stability.
They say it avoids high-risk strategies like martingale.
Right. They use a lot of fancy words, but the specifics are a bit vague.
So they talk a good game, but
Yeah, it's hard to say how it actually works in practice.
what safeguards does it actually have in place?
They mentioned using stop-loss orders.
Which is pretty standard, right?
Absolutely. Every trading system should have those.
And they talk about take-profit orders, too.
To lock in profits at predetermined targets.
Again, pretty basic stuff.
Right? Nothing groundbreaking there.
So no fancy AI-powered risk management algorithms.
Doesn't seem like it. At least not from what they're telling us.
So the key question is,
How are these basic tools implemented and calibrated?
for example, how does it determine the appropriate stop loss and take profit levels?
Exactly. Are they fixed or do they adapt to changing market conditions?
And without that information, it's hard to really assess their risk management approach.
It's like they're giving us a puzzle with half the pieces missing.
And that's where independent verification becomes crucial, right?
Absolutely. We can't just take their word for it.
We need to see some hard data.
Things like back-tested results on maximum drawdown.
That's the biggest potential loss the system has experienced, right?
Exactly. And metrics like the risk-reward ratio.
Which tells us how much potential profit we're getting for every unit of risk we're taking.
Precisely, that's how you evaluate the true risk profile of any trading system.
Okay, so let's shift gears a bit and talk about the user reviews.
Yeah, we've got a mix of positive and negative feedback,
Some users are singing CoreXG's praises.
while others are expressing some serious doubts,
Some even mention limited trading activity,
which could mean the EA is being very selective about the trades it takes.
potentially missing out on some opportunity.
That's one interpretation, yeah.
And then there are concerns about the EA's dependence on specific brokers,
Right. That could limit your choices and potentially lead to higher fees.
or even expose you to unfavorable trading conditions.
Exactly. So it's not just about the EA itself.
It's about the whole ecosystem you're plugging into.
And then we have that comment from Angelo Cavazza.
Yeah, that one raised some red flags.
He accuses the developer of manipulating data and being unresponsive to critical questions.
That's a serious accusation.
It is, and it's something we need to take seriously.
But how do we know if it's true?
Well, it's always tough to verify these kinds of claims.
Especially when it's one person's word against another's?
Right. But Angelo does invite others to contact him directly to see the evidence.
So maybe it's worth reaching out to him.
It could be the more information we have, the better.
All right, so let's talk about setting realistic expectations for a moment.
Because the marketing for this EA is pretty hyped up.
Like a lot of trading robots, they hint at extraordinary profits,
They even mention a planned price increase.
creating a sense of urgency and scarcity,
Classic marketing tactic.
designed to trigger FOMO, fear of missing out.
Exactly. They want you to buy now before it's too late,
So how should our listener approach this?
with a healthy dose of skepticism.
Don't blindly trust the developer's claims.
Do your research, look for independent verification of performance.
And remember that even the best EAs can go through periods of underperformance.
Past results are never a guarantee of future success.
So it's about being realistic, right?
Exactly. Trading is a marathon, not a sprint,
And chasing quick riches often leads to disappointment.
if not outright losses.
So it sounds like you're advocating for a cautious, evidence-based approach.
Absolutely. Don't jump in head first based on hype and marketing promises.
EAs are tools, even the most advanced ones.
They can't predict the market with 100% accuracy.
So it's not about setting it and forgetting it.
Right. You need to be actively involved, monitoring its performance.
And adjusting your strategy as needed.
Exactly. It's
Yeah.
about making informed decisions, not chasing illusions of guaranteed wealth.
So let's shift our focus to the developer for a moment.
Yeah, we've already touched on the mixed reviews and Angelo's accusations.
How important is the developer's reputation when evaluating an EA well?
It's definitely a factor to consider.
What kind of things should our listener be looking for?
Transparency is key. Does the developer openly share information about their background?
Their trading experience, the development process behind the EA.
Are they responsive to questions and concerns?
These are all good indicators of their credibility and trustworthiness.
Exactly. You want to make sure you're dealing with a legitimate operation.
In CoreXG's case, the developer seems quite active in the comment section of his blog post,
Yeah, he's engaging with users, explaining different aspects of the EA.
even defending himself against some of the criticisms.
So is that a good sign?
It suggests a willingness to be open and accountable.
But actions speak louder than words, right?
Exactly. Do their claims match up with the reality of the EA's performance?
That's what ultimately matters.
And what about the allegation of data manipulation?
That's a tough one to verify.
Angelo claims the developer deleted a signal showing a large loss.
It's hard to say what really happened without seeing the evidence.
But it's definitely something to keep in mind.
Always be wary of potential red flags.
So should our listener reach out to Angelo?
It might be worth considering.
The more information, the better.
Exactly. It's all about doing your due diligence.
Before handing over any money.
Right. You want to make sure you're making an informed decision.
It sounds like we're advising our listener to be a bit of a detective.
In a way, yes.
To dig deeper, ask questions, and not just take the information at face value.
Exactly. Due diligence is crucial when considering any trading tool.
Especially one as complex and potentially risky as an EA.
And even with all the research in the world.
There's always an element of uncertainty.
Absolutely. The market can surprise us.
And no EA can predict the future with 100% certainty.
So it's all about managing expectations, understanding the risks.
And being prepared for the inevitable ups and downs of trading.
Whether you're doing it manually or with the help of an AI-powered robot.
Well said.
Now we've covered a lot of ground.
But there's still one more important aspect to consider.
The regulatory landscape surrounding these types of trading systems.
That's a crucial piece of the puzzle.
Absolutely.
Yeah.
You need to make sure everything is above board.
And that's exactly what we'll delve into in the final part of our deep dive. So we've covered the technology, the marketing, the user feedback, even the developer's reputation.
But there's one more thing we need to talk about before we wrap things up.
And that is?
The regulatory landscape surrounding automated trading systems like CoreXG.
Right, because the world of finance is heavily regulated.
Absolutely. And for good reason, those regulations are there to protect investors.
To ensure fair practices and keep the markets stable?
Exactly. Financial markets are complex, and there's a lot of potential for abuse.
So it's not just a free-for-all where anyone can create a trading bot and start selling it.
Not at all. There are rules in place to prevent scams and shady practices.
So what does this mean for someone considering buying an EA?
Well, first and foremost, you need to make sure the developer and the EA itself are compliant with the regulations in your jurisdiction.
So it's about doing your homework right.
Exactly. Check if the developer is registered with the appropriate regulatory bodies.
Make sure everything is above board.
Precisely. You don't want to end up investing in something that's operating illegally.
And what about the risks of using unregulated or poorly regulated EAs?
Well, there's a higher chance of encountering scams and fraudulent activities.
And a lack of accountability if something goes wrong.
Exactly. So you really need to be careful.
Are there any specific red flags our listener should be aware of?
Definitely be wary of EAs that promise unrealistic returns or guaranteed profits.
That's always a good rule of thumb, right?
Absolutely. If something sounds too good to be true, it probably is.
And what about developers using aggressive marketing tactics or pressuring you to invest quickly?
That's another red flag. Legitimate developers should be transparent about their product.
About their background and the risks involved.
They shouldn't need to resort to high-pressure sales tactics to convince you.
So it all boils down to doing your due diligence, just like with any other investment.
Exactly. Check the developer's credentials, verify regulatory compliance, and read the fine print before committing any capital.
Now, beyond the legalities, there's another dimension worth considering.
Oh, really? And what's that?
The ethical implications of using AI in trading.
Ah, yes. That's a topic that's gaining more and more attention.
I admit I hadn't really thought about it much before.
It's understandable, but it's something we need to address.
So what are the ethical concerns?
Well, some people argue that AI-driven trading could exacerbate market volatility.
Creating unfair advantages for those with access to sophisticated technology.
Others worry about the potential for unintended consequences.
Things we can't even anticipate right now.
Exactly. It's a complex issue with no easy answers.
So what's the takeaway for our listener?
I wouldn't say you should feel bad about using an EA.
But it's important to be aware of the broader implications of your actions.
Right. Ask yourself, is this EA being developed and used responsibly?
Does it promote fair and transparent trading practices?
It's about being a conscious and informed participant in the market.
not just blindly following algorithms.
Exactly. You need to understand the potential impact of your choices.
So AI has the potential to revolutionize trading.
But it's our responsibility to ensure that revolution is a positive one.
We need to consider the risks and the unintended consequences alongside the potential benefits.
And we need to have an open and honest conversation about the ethical implications.
Well said. So where does that leave us with CoreXG?
It's a tough call. There are definitely some promising aspects.
The technology, the customer support, the developer's engagement with users?
But there are also some red flags. The lack of independent verification. The mixed user reviews the questions about transparency.
So it's not a clear-cut yes or no,
Exactly. It's a decision each individual trader needs to make for themselves.
based on their own risk tolerance, their investment goals, their comfort level with AI-driven trading.
And hopefully this deep dive has given our listeners the information they need to make an informed decision.
That's what we aim for, to provide our listeners with the knowledge and insights to navigate the complex world of trading.
And to make smart decisions that align with their values and goals.
So on that note, we'll wrap things up for today.
Thanks for joining us on this deep dive into CoreXG.
We hope you found it informative and thought-provoking.
And we encourage you to continue exploring the world of AI in trading.
Remember, knowledge is power, and the more you learn, the better equipped you'll be to make smart decisions.
So keep learning, keep asking questions, and keep pushing the boundaries of what's possible in trading.
Until next time.